space that has been in focus of late is metals and especially steel. That because the domestic prices have been rising and we have seen some price hikes also coming in. To understand how the sector dynamics are looking like and what's the outlook for the sector, we have with us Mr. RK Goyal, the Managing Director at Kalyani Steel. Mr. Goyal, hi, good afternoon. Thank you so much for making time and speaking with us. Well, in tandem with the global steel prices, we have seen that multiple price hikes have been taken in the domestic market as well. Just wanted a sense from you from the industry perspective of what your take is with respect to steel prices going forward.
Good afternoon. First of all, we are in specialty steel sector, manufacturing engineering steels. So as far as our prices are concerned, they are quarterly or half yearly settled with the auto OEs or other OEMs. Now, we are in this industry facing tremendous pressure, basically from rising cost of raw materials as well as ferroalloys. And this is definitely squeezing our margins. And as of now, we are not able to increase any price. Rather, last quarter, we had to give a price reduction effective from 1st of October. So it is going to have a substantial impact on our profitability. And that is true for all the specialty steel manufacturers.
So you're saying that demand is not enough for you to pass on the steel prices, and you talked about how there's going to be a pressure on the margins as well. Could you talk to us about what kind of margin levels or profitability levels should we expect?
You know, our cost increase is almost 6,000 to 8,000 rupees. And we expect this cost increase to be reimbursed by our customers. But as of now, it is in discussion, but then we are not seeing any positive signs for our customers accepting the same.
In terms of demand, when do you expect demand to come in? Are you entering a phase where it's a seasonally strong quarter for the company?
So as far as demand is concerned, there is not much change. There is no substantial change. It is by and large stable. So it's not that another 10% or 5% demand will go up. It is by and large stable.
Okay, so the demand is by and large stable, but wanted to understand from you, do you have much exposure to exports also? Because how's the export environment shaping up and the differential pricing of exports versus domestic price? What's more lucrative?
You know, as far as exports are concerned, indirectly we export almost 70% of our products. But the forgers, the auto component manufacturers are our local customers. We supply to them and they in turn export. So I think they will definitely get a big benefit because of the prices in Europe and US, and they get a alloy surcharge and the increase in alloy surcharge because of the increase in moly price, nickel price, and all other ferroalloys.
Sir, would you also want to leave us with a bit of an outlook guidance for FY24 with respect to what kind of volumes are you expecting, what kind of growth should we pencil in, etc., at least on the revenue front?
You know, as far as the growth part is concerned, we are always able to utilize our 100% capacity. So as far as our company is concerned, Kalyani Steel, we will again have the similar volumes. So there is not much increase. But yes, at the same time, if we get reimbursement of our cost, our profitability will be maintained. Otherwise, we will have a severe impact on that.
Mr. Goyal, if you're saying you're running at 100% capacity, don't you have plans to maybe increase your capacity, invest into capex, etc.?
So we definitely have plans to increase capacity. We are working on it since last quite a few years. But we are always finding this market to be highly volatile. At the same time, there is surplus capacity in the industry and profits are very erratic. Like currently, we are getting squeezed from our customers and we really do not know if we do not get any price increase, our profitability will go down.
Okay, so it looks like there's a severe pressure on the profitability. That's the worrying part at the moment. Mr. Goyal, thank you so much for joining us. You talked about how 6,000 rupees the cost of making steel, etc. has gone up and how it's expected to impair the profitability, though demand-wise, it's not looking that bad. I appreciate you joining us, Mr. Goyal, today. But shifting forward,